day. But let's focus on Blue Star. We've got the managing director of the company, Mr. Satish Jamdar, joining us now on the show. To begin with, Mr. Jamdar, your top line growth in the quarter under review was very weak. If you could just walk us through what the reason for that was, and again, what the outlook going forward is going to be.
Yeah, thanks, George. Good morning. Good afternoon, rather. Yeah, the top line has been a little lower than maybe what the expectation was. But it's actually, if you look at the second quarter in this half year, it's actually the second quarter that's caught up a bit on growth on the top line. Though our first quarter is usually large because of the seasonal business, so therefore the impact of the improvement in second quarter hasn't made up for quarter one, and so that's what you're seeing. Really speaking, it's segment 3 for us that has been a bit of a disappointment. It's actually gone down both on top line and on profits. It's a bit disappointing, but it was expected given the situation that the dollar had climbed and a lot of agency business for us. Plus a large part of this segment 3 is to do with process industry and industrial projects, which has seen a downturn, and we haven't seen the same kind of growth as compared to last year. But my view is that it's all right. It's something we can catch up on. I don't think things are going to be much better in the second half for segment 3, but I can feel that segment 1 and 2 certainly will be on catch-up mode. We should do better in the second half than the first half, as we see internally at the moment.
Mr. Jamdar, afternoon, if we look
both
at your
on top
order
line and bottom line.
Okay, and if we look at your order book in terms of the breakup, 30% from infra, you've got 35% from real estate, the balance 35% from industrial and light commercial sectors. But analysts believe that the sustenance of order flow momentum will be a big challenge for you. How do you hope to address that?
Good afternoon. Yeah, I think we need to look at this order inflows in two ways. One is that you all know we went through a very bad last year, and we booked for the first time in our lives a very large loss, almost close to 90 crores. So we're coming out of that, and one of the things we decided was to be careful of what kind of orders we book, because the market was so difficult in terms of cash flow and the delay in execution of jobs, that they were overruns and therefore cost overruns and inflationary effects hitting us. And we took a calculated risk to decide that we would actually debook some jobs which were very difficult and get out of them if we could. Almost about, I think, 80 to 100 crores we are debooked in this year. So you're seeing that effect. Secondly, we decided that a minimum margin, minimum cash flow must be ensured if you're going to go in for new projects. So our order booking actually came down in a way you can say deliberately, because we're being very cautious. We thought top line growth at any expense won't be right. We were focusing on cash flow and on profitability in the last 12 months. That's what we've been doing. On the product side, honestly, we were pushing for more growth, but the whole industry did not grow this summer. The summer was delayed. In fact, didn't happen till I think May, if I'm not wrong, in a very short summer. So usually the market grows between middle of March and middle of June, but this time there was sort of, I would say, a flat industry growth. We were also somewhat similar. Of course, last year we grew very well because of the entry into retail. So in a way, seeing a comparison of growth last year and this year. Going forward, I think there was fear of monsoons being deficient, but I think they recovered. So we think that the catch-up which has happened in quarter 2 on growth would continue into the next 2 quarters. Quarter 3 for us, we need to be cautious because it's a slow quarter for us. It's winter time. Business is normally at its lowest, so you got to be careful of our fixed costs, and that's what we'll be doing. But overall, I see our second half doing better, both top line, bottom line, and also on cash flow. Though I must say that internally we are not too happy with what we achieved, but coming away from a very bad last year, it's certainly an improvement. We still got to look at a normal year next year.
All right, Mr. Jamdar, thanks very much for joining us on the show, talking to us about those quarterly numbers, what the challenges you faced were and what the outlook going forward is. We are going to, let's take it quickly across to Rajat Bose,